I want to continue this conversation on the markets. We have Wealth Consulting CEO Jimmy Lee joining us now. So Jimmy, to kind of piggyback off of what Sabeel was saying, I mean, are you expecting that the markets are going to be reacting negatively as a result of these protests, especially after being hard hit from the coronavirus pandemic?
I believe certainly that the protests can affect the stock market in the short term, but I think as we go out, a little bit in time, I think it's going to be something that's not going to be that big of a deal. Certainly for the short term, people will be focused on whether or not we could get a second wave or maybe, that the protests and not social distancing could cause a tick up in the infection rates. But hopefully that doesn't happen. And so I think it could set the stock market back a little bit and create some volatility. I think in the longer run, as we go out a few months, I think it will not be a big deal.
I mean, markets right now are in the green, so there's clearly some disconnect there. And I was reading a note a little bit earlier that said there was similarly a disconnect in the markets after the riots in '68. What do you think is driving that?
Well, I think investors are looking past what's going on with the riots and looking to optimism about the economy reopening. So I sit here in Las Vegas today, and casinos are opening up this week. And so that's big news for this town as well as, for the entire country for the economy reopening. So I think investors are looking past what's going on. Obviously, it's extremely concerning for all of us and the safety of everyone in all the communities that have been infected so far. And hopefully this will end soon. But the investor, I think, sentiment is that more optimistic about the economy reopening, and hopefully that we'll get past this virus and look towards more good news of an economic, recovery.
So, to that point about looking ahead, we have jobs report numbers coming up. We have an FOMC meeting coming up. I mean, some people were saying just earlier today that the case might be getting stronger and stronger for negative rates. Do you at all see that?
I don't think that that'll happen. I've heard from Chairman Powell saying that it's not likely, and I believe him. And I don't think we'll get negative rates. Actually, when we get past the economy reopening and when we get past the virus in a couple of years, we're fearful that with all this new debt that we could get a little bit of inflation. So not only can we get a little bit of inflation from a supply shock from demand, hopefully coming back, but hopefully we won't get inflation that's out of control like we had in the late 70s and early 80s. But as an investor, I think you need to be prepared for that potential consequence and develop a portfolio that can do well in that environment as well.
So I want to talk to you about something that it feels like a lifetime ago that we were chatting about US-China trade deals. That was dominating our news cycle. So I want to ask you about that because we've seen the tensions between the US and China ratcheting up, China deciding to pull back on some of their purchases of soybean and pork. So do you at all see with the president downgrading relations with China that this trade deal might be in jeopardy going forward?
I certainly hope it's not, but I do believe investors are actually paying more attention to that than what's going on with the riots. And it is a big deal what happens with the trade deal with China that doesn't go backwards. And right now, with what's been going on with China and Hong Kong, that's up in the air. So hopefully things will work out and the trade deal will continue on. I know investors are really looking at that closely. But so far, with today, the stock market being up, I think investors are optimistic about that as well.
All right. Well, let's just play devil's advocate that it stalls and tensions continue to increase. What are you seeing there as the future impact on equities?
I think equities are set up for a pullback regardless of what happens with China. But certainly if we get negative news on the China trade front, it'll be another reason to take some profits for people that have been invested short term, have made some good returns on this market recovery. So I would expect either way that volatility should kick up from the protest, as well as what's going on with the China-US trade deal. And so investors should be prepared for that and maybe look at it also as an opportunity to get some money invested that you didn't get invested possibly during the downturn that we had.
All right, Jimmy Lee, Wealth Consulting CEO. Thanks so much for joining us today.
Thank you very much.